This video will give you a full overview of how to use Float for cash flow forecasting. Float is an app that integrates with QuickBooks Online, Xero and Free Agent to help you build really visual cash flow forecasts with your clients based on your best guesses and data imported from the accounting software. We then automatically keep the forecasts up to date. Let's start here where it says Total Matched Balance in QuickBooks. This lets you know how much cash is in the business right now up until the last time that invoices and bills were matched to payments in QBO. If this number ever looks incorrect, make sure that the client's matching is up to date and check which bank accounts are included. It's important to note that if your client has anything that's still waiting to be matched, then we wouldn't show that as paid in Float. The next thing to have a quick look at is the bank accounts that we're including. Here you can choose which bank accounts and credit cards you'd like to see in the forecast. If you do choose to include credit cards, then every transaction made by that credit card will pull through, but repayments won't. However, if you unselect the client's credit cards, then all you'll see from them is the repayments that get made to them in the bank transfers row. Here you can see the last time that we updated from the accounting software. This happens automatically every 24 hours, but if you've just made a change, you can update manually by clicking this button. And here you can set a cash flow threshold for when a cash flow amount goes below a certain amount. So this is currently set to be 0, but we can make it any amount that we like. And it will alert us if this client's cash goes below a certain amount. And this is the cash flow graph, which shows us the cash moving in and out of the business. The graph is split into what's happened historically and what's going to happen in the future. The blue line is your client's cash balance, which combines all the bank accounts and credit cards you've included. It's made up of the cash budgets that get entered into Float, as well as the expected payment dates on upcoming invoices and bills. You can move forward up to 3 years ahead and view the line on a daily, weekly, or monthly basis. You can look back to the last 3 months historically, which then grows up to a rolling 6 months once you've been using Float for more than 3 months. Hovering over the line here shows the day-by-day bank balance changing as well. Next, you need to take a look at your client's upcoming invoices and bills in the Bills to Pay and Invoices Due tabs. Float is one of the only cash flow tools that imports all individual invoices and bills from the accounting software to automatically populate your client's forecasts, making it ideal for short-term planning. But because of this, you do need to go to the Invoices Due and Bills to Pay tabs to ensure the payment dates are accurate. Because Float is cash-based, you need to project when invoices and bills will actually be paid rather than when they'll hit your client's P&L. This will then show you an accurate picture of how much cash your client will actually have in the future. If your client has any overdue invoices or bills, Float assumes that they are payable today. So if there are any overdue items that aren't going to get paid today, you could have an inaccurate forecast. To fix that, you can change their expected payment dates. You can see here the original due dates coming in from the accounting software. To the left, you can see the expected payment dates. For instance, let's imagine that this client has promised to pay all of their outstanding invoices at the end of the month. I'll search for their invoices and then update those expected payment dates for all of them. You can do that by selecting the ones that you want and then going to Batch Actions and then Set Expected Date. Here you can choose to add a number of days to all of their dates, or pick a specific date. For now, I'll pick a specific date at the end of the month. Great, so those have now updated. Once these invoices or bills get paid and reconciled or matched, then they'll automatically be removed from this area. In case you're wondering, all these changes only happen in Float, so we don't push any data back to the accounting software, but we do update from the accounting software every 24 hours. But not every cash transaction will be related to a bill or an invoice, and that's where forecasting comes in. The cash flow table includes all of the information about the business's cash. It contains all your clients' historic cash transactions as long as they've been matched or reconciled, information about all the bills and invoices you have due, and the forecasts that aren't necessarily tied to an invoice or a bill. We move your client's chart of account categories into cash in and cash out. We also have net cash movement at the end. To add or group any categories, you can do that in the Category Manager tab. You can go back into past months here and click on them to see what has been spent and received, as well as how much of the cash budget was paid. You can then click onto each invoice or bill to see all the detail, which is one of the reasons why Float is much more reliable and insightful than a spreadsheet-based forecast. What you need to do is create forecasts for each of these accounting categories for each month that you expect cash to move. The initial setup might take a bit of time, but once it's all set up, we automatically update the forecasts with invoices and bills from the accounting software, so you can track progress towards or beyond the forecasts. It's important to note that the forecasts in Float act like empty placeholders that then fill up with invoices, bills, and transactions from the accounting software as the month goes on, so nothing gets double counted. To enter a forecast, click into the month you want, so we'll look at advertising and marketing this month. We want to put in a forecast for the total cash that we expect this client to spend, including tax, and we'll put the date for when we actually expect to spend it rather than be invoiced for it. And that's the key difference between a cash flow and an accruals-based budget. A cash flow forecast shows cash movement when you actually expect to spend and receive money, which makes it a lot more real than an accruals-based P&L. So this client has an advertising budget for Facebook on the 1st and a Twitter advertising budget going out on the 15th of every month. So we'll enter those budgets now. As you can see, we also have the option to set the frequency of the budget. We went with monthly. And now you can see those cash budgets in all future months. The second way to enter cash budgets is to use this button called Spreadsheet Input. This is really useful if you have a forecast worked out in a spreadsheet and you want to copy and paste it into Float. To do that, just use your keyboard shortcuts, Ctrl-C and Ctrl-V, to paste it straight in. You can also type in different amounts into each cell and move around easily with the arrows or tab key from your keyboard, and you can copy a forecast forwards to the right, like a spreadsheet. The one thing is that with this method, you don't get as much granularity on date setting or individual budgets within the month as you do by clicking into each cell and entering budgets one by one, but it can be a good place to get started. Once you or your client has spent time setting up their cash budgets, they'll be able to get an accurate view of their cash flow over the coming months, which will help them make key business decisions. Sometimes your clients will want to model different hypothetical situations to help them make better business decisions. Our Scenarios feature helps you to really easily and visually understand the cash impact of different potential futures. Right now we're looking at our base or official forecast, but we can add a scenario layer to see what might happen if I hired a new employee. You might also do a scenario for increased or decreased sales, or if a project falls through, or if the client gets paid late. So you would just click Add a Scenario Layer, enter the name and choose the colour. It looks like there's just one line here now, but as soon as we change something, the two will divert. To reflect a new employee, I'll just add a new cash budget on top of the existing one for my base forecast. I'll add another 4,000 more here. Now you can see that the salaries row has turned the same colour as the scenario, and my cash budgets are updated in all future months. Scrolling back up, we can now see the impact if this client hired a new employee here. Working with scenarios will help your clients understand how various different situations will affect their cash, which is a crucial part of business planning. Float's main report lives in the Cash Flow tab. If you click on this downward arrow button, you can export your forecast to a CSV or a PDF. Let's choose PDF and give it a second to download. So you can see you've got the graph with the scenario you're looking at the time, and then on the next page you also have the summary of cash in and out. And then you have the full breakdown of what has happened in the past 3 months and what's going to happen in the future. If you have any questions at all, please just send us a message through the in-app chat support icon here or to support@floatapp.com. Happy forecasting!